in digital assets. And really what we see with the audit procedures around digital assets has to do with the custody, right? Custody and key management. As we know, at least not yet, the digital assets that are held by funds and at custodians are not necessarily insured, right? So you don't have the same fallback as you would at a traditional bank custodying X amount of assets, right? And because of that, it puts a real big strain on the private key, especially, and the management controls around control. As we say, if absent any other contract, control of the private key is ownership of the assets within that wallet, and that's where really all of the crux of audit procedures comes down to. As far as generation of new wallets, right, is something where, especially when we're talking institutionally or at least for companies, right, maybe not institutional in the traditional sense, but when a company's going to generate a new key pair, for instance, or especially in a new wallet, that setup process cannot be, the private key cannot be exposed to one member of that company, one party involved in the access process, right? So from the generation of the key to access, to storing the key, accessing it, recovering the key if it is ever lost or otherwise, if it malfunctions or somehow you've lost some material, right, some data relevant to the private key, you need to recover that. Each of those processes, each of those steps needs to have a segregation of duties, right, within the company so that one new hire doesn't run off with $100 million of Bitcoin, right? And, I'm half joking, but that is a risk. And with the rest of access rights, it is about recovery and just the innocent loss, if you will, of the private key accessibility. Because you don't want to have a position, especially as a fund or as an asset, if you're minting a new asset or a new protocol on, as for ERC-20s, then you're going to want to make sure that whatever recovery process you have for the reserves there are sufficiently recoverable, right?